Well, right now, Brian Belski with us, a single best chart. He's an equity guy. Let's do a bond chart. We've shown this a million times. This is 2-10 spread. You know, this is like the 4,000th time we've done this chart. Why is this chart, Brian, a big deal? Election day, day after election, it's all going to be great. Dow 21,000 in here, and then this big collapse and a flattening yield curve. Why does a stock guy need to care about this chart?
Lending rates, growth, you know, from an historical perspective, when you take a look at how the yield curve works, especially 2s, 10s, we have to start to worry if we see an inverted yield curve. The inverted yield curve is one of the best predictors of a recession. That's what everyone is looking at and thinking about. Okay,
and I'll go with that. And I don't know if I have the chart here. I'm gonna do this, Bowden, in real time. I'm breaking every surveillance rule here. I'm bringing the chart, Bowden, yeah. And on Bloomberg Radio, what we're going to do is bring up the 2s, 10s here, which I had up yesterday. I don't see it. I'm going to make the chart right now. USYC 2Y10. Do you like that I have that memorized, Brian?
That's impressive.
Is that impressive?
This is real live TV.
This is like real live TV. There's the chart the pros use back a million years. And the answer is we're nowhere near that recession level.
We're not.
We're not near that. When, on basis points, when do you start to sweat? That's the money question. Right? Is it here? Is it here? Is it here? Or do you have to wait down to zero to where you sweat?
I think you wait till zero because
really?
Yes, because people have been so reactive on this downward slope. I'm looking at the chart right now, and I think what the market is not prepared for is a growth scare to the upside, Tom. We have now defensively positioned our portfolios. We are so concentrated in a few stocks. We believe that growth is scarce, and when growth is scarce, growth outperforms, and that's why we continue to talk about the FANG stocks and all these names. I think that the market is not prepared for things to get better. And so if that's the case, then we're going to have an upward move that people are not prepared for. So I think the market's already prepared for this.
Right. But Brian, is it as simplistic as saying if you look at the Treasury and if you look at that spread, actually it means that they factor hardly any growth in, or is it something a little bit more nuanced in the markets?
Well, I don't think it's more nuanced in the markets. I think people are prepared for no growth. I think we've become a binary type of investor, meaning all or none. And I think most people are prepared for no growth. And again, as we said in an earlier section, the Fed's holding all the cards, and we think that the Fed is going to raise rates a couple more times. But if we do have the negative growth scare in the third quarter, Francine, then we're going to have that flatten out even more.